Hello everybody, Tortoise Investing coming at you today with a stock review where you're going to be taking a look at Starbucks. Is it a buy now? And do a deep dive into it. Now, if you are new, please hit that subscribe button, join the 868 that I've already done so, and drop a like down below. It helps the videos out a ton. I greatly appreciate it. I have had a rough week. I went from COVID into my computer hard drive SSD decided to just quit working, and I had to fight with that for the last 2 days trying to get it to work. We're back, and yeah, let's go ahead and roll in things. Hit that bell so you know when I do my uploads as well. Starbucks Corporation, I really like this company, especially at current prices. Now, the free cash flow yield, 3.18%. We've got a dividend yield, 2.48%. Payout ratio, 60.34%. Take a look at the revenue. Revenue's been growing at a rate of 9.22% over the last 10 years. Pretty good. Cash flow, 7.66% over the last 10 years. Not too bad there as well. EPS has been growing, as you see here, up and to the right. These numbers are off. Their debt, they have $12.27 billion in debt. Their EBITDA last year was $7.33 billion. See if this has been updated any. Nope. But my rule of thumb is I don't like companies that have more than 3 times their EBITDA in debt. That shows that there's some financial instability there. And if things were to get tough, it might hit them a little bit harder than a company that has their finances in order. And Starbucks does a really good job at keeping their debt manageable. I like what they do here. The dividend's been increased at a rate of 15.93% over the last 10 years. Here lately, they've been doing around 7 to 8% dividend hikes. Not bad, you know, upper single digits. Definitely like that. That is inflation beating growth. Shares outstanding over the last 10 years, been buying them back at a rate of 2.79%. You always love it when a company does share buybacks. That means you get a bigger and bigger piece of the pie. And it looks like they haven't been nibbling at any here at the moment. But they will. They usually do a pretty good job at consistently, as you see here, just nibbling at that over time. Return on capital employed is beautiful with this company. They had the 2020 hiccup. Again, half the world did at 7%. But 2021, right back on track, right at 21%. And then 24.5% in 2022 and 29.21% in 2023. That is a beautiful return on capital employed. Usually companies average around 9 to 10%, so this is knocking it out of the park. And another good thing that I really like is their CapEx isn't just going absolutely nuts. You don't like a company if they have a lot of CapEx mixed with their growth. That's showing that they have to spend a lot of money to make a lot of money. Never a good thing. Their CapEx is going up, but it's not like doubling or quadrupling over a year. Now, you take a look here. This is just simply Wall Street. It's like a little website I go to check the future growth projections for revenue. As you can see here, Starbucks forecast to grow earnings and revenue. Earnings at a rate of 12% and revenue at a rate of 8.9% annually. EPS is expected to grow at 14.4%. So I use this revenue growth and I actually put it into a scenario, which is a new thing through Qualtrim Insights. You can create your own little scenarios here. And I put in, this calls for 8.89, so I put in 8% growth, margins, cap efficiency, everything I left the same. Market cap just updated, and when it comes to free cash flow, just to be conservative, I put this as being low with its predictability. And if you update it here, you're getting a annual return anywhere from 13 to 17%, and I love that. I love that a lot. And this isn't guaranteed. This isn't something that's, you know, not financial advice, but this kind of gives me an idea of like their cash flows look great. This is something that I want to take a deeper dive into, and I have. I really do like Starbucks a lot. Now, they are opening up new stores like crazy, which is another thing I love about that. So that CapEx might have something to do with them opening up a bunch of new locations. Starbucks plans to open 17,000 stores to bring its global store count to 55,000 by 2030. That is awesome. United States store count is expected to reach 16.3 thousand. Don't know why I said that. Could have just said 16,300 with a 4% net new growth store growth plan in 2024 and a long-term goal of 20,000 locations. And they are also renovating 1,000 stores a year. Absolutely beautiful. And another thing, it's really great. I know they've been having some like union issues, and there's been a lot of like salary disputes. Hourly pay increases, 50% increases coming through hours and higher wages. So it's another thing that the employees and stuff at the companies have to look forward to. Now, Starbucks as a whole, I gotta say, I'm a fan. I really like the company a lot, especially at these current prices. If we take a look here at the 5-year chart, there's been a couple times where things been in a little bit over $110. This appeared at $125 in 2021. It cracked recently. Let's see here. Yep, it was flirting with the 110s, and then it dropped back down to $92.70. So I like it. I'm probably just gonna go ahead and jump into a position. My personal, not financial advice, not telling you to buy it, but I'm probably gonna jump into it. A little starter position. If it drops anymore, buy a little more. But yeah, is Starbucks a buy now? My personal opinion, yes, I like it. Hope you enjoy. Make sure to hit that like and subscribe button for more. And until next time, take care. See yous.